Let me tell you something that nobody in the real estate industry wants you to hear. Right now, thousands of people across Australia are rushing to buy property in Brisbane. They are seeing the headlines, they are watching their friends celebrate, they are scrolling through Instagram and seeing people post about their new homes in Queensland. And every single day, real estate agents are calling them, messaging them, telling them that if they don't act now, they are going to miss the biggest opportunity of their lifetime. But here is what those agents are not telling you. Here is what the glossy brochures leave out. And here is why watching this video before you sign anything could literally save you hundreds of thousands of dollars. Brisbane's median dwelling value has now crossed $1 million. Let that sink in for a moment. Just a few years ago, Brisbane was celebrated as Australia's affordable city. People were leaving Sydney and Melbourne specifically because Brisbane was cheaper. Now, according to NAB's latest property market data from January 2026, the median dwelling value in Brisbane sits at $1,054,000. The city that was once the bargain capital of Australia has transformed into its second most expensive property market almost overnight. And yet the agents are still out there, smiling, handing you coffee at open homes, telling you that you're getting a deal. So what actually happened? How did Brisbane go from affordable Sunshine City to a market where average families are stretching every single dollar just to get their foot in the door? The answer involves a perfect storm of factors that the property industry loves to celebrate but rarely explains with complete honesty. Over the past year alone, Brisbane dwelling values climbed by 14.5%. That is more than double the pace of Sydney. And while that sounds like incredible news if you already own property, if you are trying to buy your first home or make your first investment, that number should stop you cold. Here is the part nobody talks about at the open home. When prices rise that fast, something called FOMO, fear of missing out, takes over the entire market. Buyers stop making rational decisions. They start making emotional ones. A recent analysis from property experts highlighted exactly how this plays out on the ground in Brisbane right now. A buyer walks into an auction. They see a crowd. They feel the energy. They tell themselves they will not go above their limit. Then the auctioneer starts calling bids, and suddenly that limit feels flexible. Buyers are routinely offering above comparable sales, not because the property is worth more, but because they are terrified of losing. And here is the hidden damage that creates. Every single inflated sale becomes the new benchmark. Agents use that result to justify higher asking prices for the next property. Then the next, then the next. The cycle feeds itself, and ordinary buyers are the ones paying for it. But let us talk about something even more alarming, something that very few people are discussing publicly. In early 2026, APRA, Australia's financial regulator, introduced new restrictions on high debt-to-income lending. What this means in plain language is that the regulator has essentially looked at the Brisbane market and said, people are borrowing too much money relative to what they actually earn. That is a warning sign that sends chills down the spine of anyone who understands finance. When a regulator steps in and says we need to slow down how much people can borrow, it is not because everything is fine. It is because they are seeing stress in the system that the average buyer on a Saturday morning at an open home never gets to see. And it gets more complex from there. The big four Australian banks, Westpac, NAB, ANZ, and Commonwealth, are all forecasting that Brisbane will continue to grow in 2026. Westpac says 4.5%. NAB says 4.6%. These are the same institutions that are lending people money to buy properties. Think about that conflict of interest for a moment. The banks benefit when you buy. Agents benefit when you buy. Property developers benefit when you buy. But who is sitting across the table from you with absolutely no financial interest in the outcome, helping you make the most rational and calm decision possible? For most buyers walking through Brisbane open homes right now, the honest answer is nobody. Now, here is where the 2032 Olympic story gets really interesting, because this is the narrative that has perhaps done more to inflate Brisbane buyer sentiment than anything else. The pitch goes like this: Brisbane is hosting the Olympics in 2032. Infrastructure spending will be in the tens of billions of dollars. The world will discover Brisbane. Global attention will pour into Queensland. Property prices will explode. Buy now before it is too late. And look, there is truth buried in that story. The Queensland and federal governments have committed to enormous infrastructure investment, transport upgrades, urban renewal, sports facilities across the entire city. These things are real, and they will reshape parts of Brisbane significantly over the next decade. But here is what the salespeople conveniently skip over when they are showing you a glossy floor plan. The Olympics are in 2032. That is 6 years away. Property markets do not move in a straight line for 6 years. They cycle, they slow down, they correct. People who bought in Sydney ahead of the 2000 Olympics experienced exactly this pattern. Prices ran up aggressively in anticipation, then flattened, then dipped, and only recovered fully years later. If you are buying in Brisbane today at peak prices, using the Olympics as your primary investment justification, you need to ask yourself honestly and without emotion whether you can hold that property through a potential flat or declining period without causing serious financial pain to yourself and your family. Let us get into the supply story because this is where things get genuinely troubling for anyone paying attention. Brisbane's rental vacancy rate has dropped to just 0.9%. That means for every 100 rental properties in Brisbane, less than one is sitting empty at any given time. On the surface, this sounds like a compelling reason to invest. And for established landlords who bought years ago at much lower prices, it absolutely is. But here is the problem that nobody at the property seminar will tell you. The construction industry in Queensland is under enormous stress right now. Building costs have surged dramatically since the pandemic. Labor shortages are severe and persistent. Builders across Queensland have been going under at alarming rates. Housing approvals are sitting near decade-low levels nationally. What this all means in practical terms is that the shortage of new housing supply is not going to be fixed quickly. Relief is not coming at the pace the city desperately needs, and so buyers keep competing furiously for the same pool of existing properties, which keeps pushing prices up, which keeps making affordability worse, which pushes more people into the rental market, which keeps vacancy dangerously low, which attracts more investors into the city, and around this painful cycle continues. A KPMG analysis released in late 2025 put a stark and sobering number on what this spiral means for first home buyers specifically. Affordability has shrunk dramatically across Brisbane. The pathway to home ownership in this city is getting narrower every year. It is happening later and later in people's lives, and it is becoming increasingly dependent on parental support, financial gifts, or inheritance. This is not just a minor inconvenience that will sort itself out. This is a structural shift in who gets to own property in one of Australia's major cities. The average first home buyer trying to enter Brisbane right now is not competing on a level playing field. They are competing against investors backed by existing equity from other properties, against interstate buyers who have already sold a Sydney home and arrived in Brisbane with hundreds of thousands of dollars cash in hand, and against buyers who have family financial support that most people simply do not have access to. And they are being told at every open home by every smiling agent that this is simply how the market works and that they should move faster. Here is another layer to this story that gets almost no coverage. Property listings in Brisbane are currently sitting roughly 25% below the 5-year average. Think about what that means for you as a buyer. You have more competition, you have less choice, you have less time to make decisions, and you have less negotiating power than at almost any point in recent memory. 19 days. That is the average number of days a property sits on the Brisbane market before it sells. 19 days. In many desirable suburbs, it is less. You are expected to inspect a property, do your due diligence, arrange finance, negotiate terms, and sign contracts on a decision worth over $1 million in under 3 weeks. That is not a normal buying environment. That is a pressure cooker designed to make careful, rational thinking almost impossible. So, what should you actually do with all of this information? Because here is the important thing to understand. This is not a video telling you to never buy property in Brisbane. That would be an oversimplification of a genuinely complex and nuanced picture. What this is telling you is to slow down, ask harder questions, and stop letting artificial urgency drive a decision that will affect your financial life for the next 20 or 30 years. If you are genuinely considering buying in Brisbane right now, here is what the real data suggests you need to think carefully about before you go to another open home. First, understand exactly where you are buying and precisely why. Not all of Brisbane is the same market performing for the same reasons. Some suburbs have deep, long-term structural drivers of demand, strong local employment anchors, excellent school catchments, major transport infrastructure, genuine community amenity. Others are riding a wave of sentiment and hype that will recede when the excitement fades. The difference between these two types of suburbs is not always obvious from a weekend of open home visits. It requires serious research and local expertise that takes time to develop. Second, get genuinely independent advice, not from the selling agent who earns commission when you pay more, not from a mortgage broker whose income scales with the size of your loan. Find someone who is legally and professionally obligated to act exclusively in your interest. The cost of a qualified buyer's agent or financial advisor is genuinely nothing compared to the potential cost of making the wrong decision at prices like these. Third, run your numbers under real stress scenarios. What happens to your monthly repayments if interest rates rise by another full percent? What happens to your finances if Brisbane's growth moderates to 3 or 4% annually rather than the 10 or 12% we have recently seen? What happens if your circumstances change and you need to sell in 3 years rather than holding for a decade as planned? If the honest answer to any of those questions involves financial hardship, the timing of this purchase may not be right for you regardless of what the broader market is doing. And fourth, and this one matters enormously, do not let an agent's urgency become your urgency. This is one of the oldest and most effective techniques in all of sales. Create scarcity, create time pressure, make the buyer feel that hesitation is the enemy and that speed is wisdom. The reality is that in a market this active, there will always be another property. Missing one auction is not a catastrophe. Making a financially ruinous decision because someone in a suit told you the window was closing in 48 hours, that is a catastrophe that takes years to recover from. The Brisbane property market is real, it is moving, and there are genuine opportunities within it for the right buyer, at the right price, in the right location, with the right financial preparation. But the story that agents and developers are aggressively selling, that you need to buy now at any price in any suburb before the opportunity vanishes forever, that story exists to benefit them, not you. The most important thing you can do before you make a decision of this magnitude is to understand exactly what you are buying, exactly what you are paying relative to actual value, and exactly what happens to your financial life if things do not unfold according to plan. Because in property, as in every major financial decision, the people who get hurt are rarely the ones who were too careful or too patient. They are almost always the ones who were in too much of a rush.